One of the most surprising narratives we've seen this year is that software stocks have really been crushing it. Earlier this year, it was really Nvidia's world, and it was all about these chip makers that were making big money off AI, or poised to do so in the minds of investors. And software stocks like ServiceNow weren't seeing the same kind of momentum. All these software companies were talking about AI, but investors were worried it would take some time for that to translate into real revenue. But investors have warmed up to software stocks in a big way lately. Here's what you need to know about the AI effect on software stocks versus chip stocks. To compare software and chip stocks, let's look at two ETFs that are benchmarks for the sectors. There's SOXX, which tracks chip makers, and IGV, which tracks software companies. As we can see, software stocks really underperformed in the beginning part of this year. Companies were teasing out AI software offerings that promised to transform the way people do business by reducing their workloads. But there was no real proof that customers would pay for that. Plus, companies were looking at the economy and being cautious about their spending on software in general. By contrast, the chip sector was really riding the AI hype. That's because Nvidia's strong sales momentum was fueling optimism that other chip companies would start seeing huge AI revenue windfalls as well. But software stocks have really taken off in the second half of this year. In fact, when you look on a year-to-date basis, the software sector has beaten the chip sector and even beaten the S&P 500. Some of the factors driving this change are a healthier backdrop for corporate IT spending and the potential for better M&A policies under Trump. But looking forward, perhaps the most important trend to focus on is that the software sector is expected to be the biggest winner of the AI spending boom over the next few years. Market researcher IDC forecasts that global AI spending could more than double by 2028, with the software sector experiencing a 34% compound annual growth rate over the next 5 years. That compares to 23% for the hardware sector. Some software stocks are already reflecting this optimism. For example, Palantir has been one of the best stocks in the S&P 500 this year, even better than Nvidia. Some people see that big rally as out of step with reality, but investors who are bullish on Palantir stock say that AI has been a big part of the company's recent success. Of course, not all software companies have been recent winners. Adobe stock is actually down this year. Some analysts see AI as a double-edged sword for Adobe. The company has rolled out powerful tools that let you use AI for image generation and other creative processes. But the fear is that automating tasks could reduce the need for human workers, potentially leading to fewer software licenses sold. That could mean that Adobe has to rethink how it monetizes its software in the long run. Investors need to know that the AI story is broadening out beyond Nvidia. But even though AI is exciting, it's important to remember that so much of the software sector hinges on having an economy that's conducive to corporate spending. Looking to 2025, there are some potential risks with the Trump presidency, including uncertainty around AI policy and whether the government will clamp down on this hot technology.